Welcome back, traders, and we're back with another daily analysis. Today's the 27th August 2024. Starting off with the US dollar rebounded slightly on Monday after its worst week since June 2023, thanks to the stronger than expected durable good offer. Last week, the dollar index dropped 1.75%, hitting a 2024 low of around 100.6, mainly due to Jerome Powell's speech at the Jackson Hole. The decline continued as traders expect the Fed to start easing rates in September. US yields mirrored the dollar's drop, but any recovery may hinge on changing investor sentiment around the Fed potential rate cuts. Technically, the US dollar has fallen below the key 200-day moving averages of 104, suggesting more downside risk. If the selling persists, the index could test support levels at 100.61 and 100, with a further drop to 99.57 possible. However, with the RSI showing oversold conditions, there's a chance of a short-term bounce, with resistance levels at 101 and 101.59. And then for WTI, oil prices rebounded on Monday to around $78 after a sharp drop last week, driven by renewed hopes that the Fed will cut the interest rates in September. A weaker US dollar typically boosts the risk sentiment, making a drop in oil prices less harmful in the local currencies. However, the outlook remains uncertain due to the ongoing conflicts in the Middle East and the concerns about the global oil supply and demand. China oil demand has declined for 3 straight months, raising fears that its peak oil consumption may come sooner than expected. On the technical side, indicators like the 14-day RSI has risen from 37 to around 53, suggesting further prices increase. If oil stays above the 200-day moving average of 78.07, initial resistance is at 79.9 and 80. On the downside, support levels are at 76.92, 75.08, and $73.45. And then for the gold prices, pulled back slightly from Monday's high of $2,527, but held steady above 2,515, supported by a weaker dollar and dovish comments from Fed Chairman Jerome Powell, who hinted that the possible rate cuts starting in September. The markets are already pricing in the 25 basis point cut with the chance of a more aggressive easing, which could make gold more attractive compared to other currencies. The geopolitical tensions in the Middle East, particularly with the Hezbollah and Israel, are also boosting demand for gold as a safe haven asset. Technically, gold is in the consolidation phase after last week's gain, with the 14-day RSI above 63, indicating a continued bullish trend. The $2,500 serves as a key support, and if gold holds above this, it could target levels at 2,531.7 and 2,551.1, with the potential to reach 2,620. However, if the gold fails to stay above 2,500, it might drop to the support at 2484.5 or 2450.2. And that is all for today daily analysis. Thank you for watching and don't forget to like and subscribe.